Is on this Thursday, the 20th of April. Hello, Philip. How you doing, mate? Thursday, yes, our last show of the week, of course. And joining us today, as always, or joining me today, as always, will be Ash. And I think we might even have Phil come in, say good day as well. Phil's going to show us a little bit next week, as on next Thursday, about his fascinating method of trading, and can't wait for that. And you guys should be very interested as well. Okay, let's get on with it, shall we? And I'll start with gold. Actually, I'll update a couple of things that I'm in. Not going so well, actually. On euro versus the dollar. Got tipped into that yesterday with this rogue candle here. Which shouldn't have happened. I will say that. Sorry, you can't see my chart. There we go. Yeah, look, still in this, but not looking flash. Yesterday's candle was a shocker, frankly, and I've got no idea what drove that, if anything. Maybe it's just the market, but doesn't look flash at the moment, and it's kiss and cousin Euro Aussie, although it produced a terrible candle for me on Tuesday, prices failed to get a move on to the upside. So I'm still a little bit, I'm confident that can come down. It's just a matter of when. And hopefully that's soon to get us back into the profit area. Other trades that we were talking about on Monday, maybe not talking about this one, but I think probably I was. And I was looking at trading a false break of the CAD versus the Swissy, and looking to buy it above this bar here, as you can clearly see. The market wanted absolutely nothing to do with that, and thus far has put in some bearish, or fairly bearish, price action. I'm still waiting on CAD Swiss to get some money out of it. It's taking a long, long time to develop. And the reason, of course, is that we are at all-time lows down here. That's the monthly chart that we're looking at. But it continues to hang around underneath that strong level. So continuing to watch it. I think that's it. Aussie dollar, we traded on actually we've still got an order on Aussie dollar short underneath this bar here. Everything seems to be false breaks for me at the moment. And this just happens to be one. That order's still in place with my entry here. My stop loss is just on the weekly pivot. And that hasn't triggered, obviously. Also had on the daily chart on Monday, an alternate long, which was exactly the reverse of the weekly. So I've cancelled that. Too much dithering here, if you like. There'll be a far better price if you want to go long, I think. But for me, it's still the weekly for the short. All right, let's talk about gold and see if we've got anything to trade today. Would have been a good one yesterday by the look of it. I wasn't about, didn't trade it. The day before looks as though it might have been a bit hairy. But the day before that, which was Tuesday, what candle's that? 8 o'clock, 9 o'clock. So there's the top of your range, trading into them in the daily pivot. See what it does, don't you? It's a terrible habit to have. All right, so up and down week for gold thus far in terms of the breakout and in terms of price, I hasten to add. Let's go with the range here today, which is under the daily pivot, much, much better, and the current level as we approach London Open is the high of that bar. 2001. Interesting price for gold, right? And I was of the opinion, like many, many others, that once it broke 2000, it would take off. Hasn't done that yet, but this is a key level. Not so much because it's recent price, but 2001, dare I say it, plenty of space above it. Right? Someone will get that. Someone will get it. Gold euro, Philip. Excellent, mate. Got quite a bit on gold euro. Interesting. Very, very good. If you want to share that with us at any stage, please do. I mean, you've already shared it, but if you want to go a little bit deeper into that, fine. All right, there's our candle. We're trading short and long. Reasonable target here for the long. and a reasonable target here for the short, so why not? Let's do the long first. It'll be a buy stop at 2002. Once again, if you're new to this, first of all, welcome. But second of all, this is to be traded at 0 to very, very extremely small risk, because it's not proven yet, right? We haven't proven that this works, so we have to be very, very cautious. The low is 1990, and that will do us for our stop loss for the buy. Our target for the buy will be just under the weekly pivot. I would say let's go with the open of that bar there, 2009, let's call it 2010. Whoops. And the long is now in place. Right, for the short, that will be a sell stop. Again, just make sure that your volume here is very, very low if you're going to take it. And the sell stop takes place at 1990, did I say? Yes, I did. Or if I didn't, I should have. 1990. And the stop loss is at 2002. And first take, or the take profit, will make it DS1. And the DS1 level today is 1972. Something happened in 1972. I left school. Yep. That's how old I am. You can work it out, guys. You leave school at 18 here in Australia, and I left school at 1972. Yeah, that doesn't make sense. I must have been young when I left school, but I went right through. Anyway, righto. So we put all that in. We're good to go. And the long above here, the short below here. The stop loss for the long is the short entry. The stop loss for the short is the long entry. And as soon as one gets triggered, you cancel the other. Very, very simple formula. Righto, I've mentioned the trades that I'm in, and now I'll go on to the trades that I wish I know what potentially bobbed up as a trade today. First of them is on that chart there. It was Kiwi Swissy. In fact, it was the only game changer bar for the day. And not remarkably, it's kicked the goal already. Because there was your seller bar and your game changer bar. And there you go, hit DS3 already and has come back off it. So if you got into that, you should have taken profit, obviously, at some stage, and now be safe and trading that for free. Wouldn't have been that hard to take, I suppose. If you look at that profit there, entry here, stop loss here, you've probably got around about 0.5 to 1 before you take profit. There and there, 35, 37 pips. You got about 20, so that's pretty good for a first take profit. Can it go any further? Don't think it's a good prospect right now. So profit in the bank would be a good idea, I believe. Hey, Lewis, how you doing, buddy? Good to see you in. That's Kiwi Swiss, the only game changer bar for the day. And as you may have guessed, I didn't trade it. What I did look at very, very closely, however, was Euro, Swissy, and dollar CAD. Let's have a look at that. Let's go with dollar CAD because it's open. Not so much to trade today, but if we were fortunate enough to get a seller bar today that came back down to the daily pivot, for instance, or even this level here, which is pretty clear for recency, right there, price would have pulled back to there today and closed there, I'd be more than happy to place a long entry here tomorrow and get my stop loss underneath the weekly pivot if the bar doesn't close there. So stop loss down here, entry here, clear false break, setup, and clear target up here for at least your first, well, maybe your first profit, maybe your target, depends on how you want to trade it. That would be better than 1-to-1, probably 1.5-to-1 before you get to there. Maybe leave something on the table to get you up to here, which would, of course, fill in that box range, which is pretty, I won't say the highs here are clear, but it looks very boxy to me. So target area has got to be in this vicinity, I would have thought. That is dollar CAD. The other one I wanted to take a closer look at was euro versus the Swissy. Tough pair to catch, and we speak about that often, how tough it is to catch. Weekly was indeed a nothing, just sitting there in fresh air. But the daily yesterday was a corker. When I say a corker, that's an Australian term, I think, may not be. But it means that I've got well, maybe it's a key reversal bar. It's closed near-ish its low, but not on it, that's for sure. But it's a clear reversal bar without question. I suppose the only question is, for me, well, it's not really, because you draw that line across there, it's pretty clear that there's a confluence as well. So things against that, big tweezer bottom sitting here. What's that look like on the weekly? I have no fear of that at this point, because I don't think the level's that strong. I think your level's probably here somewhere, around about that vicinity. Support here, resistance here, support here again. So I think that's probably the level that you need to be extremely conscious of. And why didn't I take that trade? There'd be a reason, but I can't think of what it was right now. There's room for take profit. 27. Yeah, half that. Not the worst by any stretch. Big picture. That's why, big picture. Euro Swissy, because we're way, way, way overdue for a response to all this, I believe. And that bar there is interesting. So, yeah, short term, I get it down to here, but not a fan in the medium to long term. Taking profit on the first leg of XTI, now on the second leg. Excellent, Philip. Yeah, that was the one I called on Monday, wasn't it, as a false break of this bar. Glad you got something out of it. I'm not saying that you traded it because I said it, but that turned out to be absolutely beautiful. And anybody who wants to know how to trade a one candle reversal, that's it. That's it. As soon as we came back under here, it's proving this level here. It's proving to me it's been support, resistance, and it's in a box range. All you're looking for here is two things: the break of the bar that broke out, which means that this breakout is false, and they're wrong here. The buyers are wrong here because they've tried to continue on with that. They've hit resistance and failed. So that looks like it might be a clanger of the trade. If you're not in it, no point getting in now, but a nice retracement back here tomorrow or even today, a buyer bar here today, would be a good opportunity to get into that or back into that. Don't know if fundamentally that's a wise thing to do, but I'm not a fundamental trader. It's all about the charts for me. And if that were to be the case, then I would jump on it again. That would be good. Dollar index I want to have a look at. Reason, this level here continues to hold. We flagged that that level 2 months ago, I think, as potential for a trap for price. And so far, so good. That appears to be going into range here. Why would the dollar rally? Well, I'm not going into that argument. There's many experts predicting what will happen to the dollar next and what is happening to it already. But technically for me, this is a buy zone and has been since this weekly bar closed above that level. And even an entry above there would have made sense to me. But it's not doing too much, I've got to say. It's really going sideways at the moment. it will break out, and maybe we even had an opportunity on the daily to investigate that. Now it's a little bit off it with that bar there, but it's a little bit off the trade line, so a little bit dangerous trading into that. We zoom in a little bit to see what I mean. So if you wanted to take, well, there's a couple of reasons why you'd think about it, and I'll give you this one as well. But two things haven't happened. The first thing that hasn't happened is that trade line hasn't been retested, and that confluence area made it really, really attractive for price there. I would have thought didn't happen. Weekly pivot held it up, and then the next thing that didn't happen was the price didn't break above this bar and hit this resistance level. So there's something funky going on here with the dollar index. Nobody knows what to do at the moment by the look of things, and I can see a reason to do absolutely nothing until we hit one of those levels, and then look for a setup to trade it off those levels, not through them. That's the dollar index, and of course that's shaping up all sorts of things, including gold, including the all the indices really. And I'll bring Ash in here because I'm sure he's got something to say about the indices and why we're seeing what we're seeing, if we're seeing anything at all. G'day, buddy.
Hi, mate. Yeah. Do you know, I've just taken a trade on the FTSE. Actually, I didn't call it because I'm not. Things have just developed a little bit, but let's have a look at it because I think
Sure.
I think there's a chance that we could get some money here, but it's pretty tight. Let's bring this over here. Do that and do that. Okay, yeah, a little bit tight. And we'll talk about the dollar index in a second. But what I've done here with the FTSE is just I've just traded it short, just under this bar here where the daily pivot is. Now, the reason for the trade is actually a little bit to do with the dollar, which we'll explore. But there's a few things. But there's this trend line that is just dissecting this through here, a little bit of a false break there, back above, back below. So I'm just wondering whether we can get back down to these lows here. And currently we're under that level, so there's a chance. But really, in the next 3 minutes, I'll have a 2 minutes actually. I'll have a better idea because this is the hourly, obviously, and it's the 15 that I'm really looking out for. What I don't want to see is us get back above this line because that might suggest that a little test of that level and we're off again.
What I don't want to see
may well kind of promote me to close the trade altogether, but we'll see. But if it remains down here, then I'll stick with it for a few bars and just see what happens. I'm not sure if I've got. Ooh, that take profit might be a bit low, but we'll see if it kind of comes down. I'm really sort of aiming for this low here. But yeah, we'll know in the next minute and a half whether this is a worthwhile trade. I haven't put stops in actually. Let me just do that. Stops just above that level there, and we'll just really above these bars. But that's more of a protective area because, as I say, if it closes above this trend line, that suggests we might start to mess around in this area. And I won't want to stick in this trade at all. Now I've got in probably 3 pips too early, but I think that anybody needs to you need to wait for this bar to close. That would be the best case scenario. The reason I got in a little bit early is that when the market opened this morning, it was quite negative initially, but I've just seen the banks recover a little bit, and that puts this trade a little bit at risk. It's not quite sure now. The likes of BP and Shell are starting to come down a bit. And if you look at some of the reasons why, and this is why this relates to the dollar, you look at what's going on with oil. Oil needs to close this gap, and it looks like it's on its way there. We are starting to see a 4-hour trend, lower low there. From this area here, lower low down there, lower high, lower low, lower high, and it looks like it's making this journey. So that's the first thing that promoted me to towards a sell in the FTSE. And I did see Shell open up, Shell and BP both open up quite negatively, but it's the banking sector which is just managing to kind of keep things afloat, and a little bit to do with the mining stocks as well. Even though Rio Tinto's down over 1%, so there is just a little bit of negativity. So we'll see if this continues to push down. And I would suspect that if it does, there's a chance that that it brings down the likes of BP and Shell a little bit more extreme. And if that was to happen, then that would look pretty good for some downside. FTSE's managed to close under the level on the 15, looking quite negative as well. So technically speaking, it looks all right. I wish I'd got in actual fact, maybe the price wasn't that bad. If the bar was waited for, then actually I've gotten a few pips higher. So I won't be beating myself up too much on that, but I could have done with saving maybe 3 or 4 pips there. But we'll see if it comes down, mate. That's the trade right now. The Nasdaq is also of interest, but for different reasons and actually different directions. I was considering a hedge trade because I wonder whether the Nasdaq might get a boost from this particular level here. And my question is, why would the Nasdaq collapse just before we've got jobs data? Because really what's going on and the dynamic that's going on is that that there is the Fed meeting coming up in May, and there are kind of like predictions about what's going to happen next. The FTSE looks weaker because we've had awful inflation data yet again yesterday from the UK, which is going to strengthen the pound, and the pound's been on a bit of a tear. And even though economically it's not the sickest kid in the school, but it is sick. And even though the UK economy is a bit sick, we've got CPI and inflation data suggesting that the Bank of England will raise again, which does put pressure on the FTSE. Now it might be different with the US economy purely because the Fed, yes, are under pressure to raise interest rates, but economically they're not too bad. They're not in too bad shape. We are just seeing a little bit of weakness step in. So, you know, what happens here, I don't know, but I am considering a hedge trade where I take a long on the Nasdaq and a short on the FTSE. But if you look across the board of whether that would be a sensible idea, got to get a figure of the dollar. And we've just seen what's happened with oil. This is what's going on with gold. And if we look at gold on a 4-hourly, again, lower low and a lower high potentially kind of coming in. And if it's not here, it's getting pretty close to this particular point. I did take a dollar long against the Swissy yesterday. And I was fortunate enough to close the trade when it hit the highs and not anticipate any further. It was, yeah, I closed it up here. But as this comes down, this is starting to look quite attractive again for a potential long here. So I think the dollar might well get a lift here. And now again, you look at the 4-hour, it's found a pretty nice range here, and we're nearer the bottom end of the range of this this particular box. So the dollar's looking to have just at least a hold here, and I suspect it will hold until the US session. I don't think it's going to break out, but I don't know why it would. I'm just going to change the color of this. I don't like the yellow for seeing what we need to see. Let's use something a little bit lighter, something like. Let's use this. Well, it might be a bit easier to see. Yeah, I don't know why it would break to the downside, but I'm not sure if it would break to the upside either. But you can see that it's edging, you know, and there is this slightly more difficult trend line to get through here.
What are we waiting for? There's a pause. What are we waiting for? Is there something
well, today we're waiting for jobs data, and really this is now all about the May meeting. So it's really sort of, you know, data to suggest not only will they raise interest rates, because they're going to raise interest rates. So, I think we can say that with quite a bit of confidence. Interest rates are going to rise. The question is, firstly, is it a 25 basis point over a 50? Probably a 25. But secondly, what do they say after it to either suggest that the pause is in, or to suggest that that they're going to keep going? So I think that there's this dynamic going on right now with the dollar where I think the buyers are starting to come back in, but they don't really know how high to push it. But down here, if you look at this, you look at the dollar on a weekly against the Swissy. Not how that looks at all. There we go. Let's just make that chart a bit smaller. You look at it here against the Swissy, and the Swissy is looking under pressure to the upside. That's where the pressure is right now, not down here. There's not a lot left probably, and it's already tested that area. So the pressure's to the upside, and the dollar has been tanking really because of the potential pause in interest rates. Well, that pause hasn't come, and yet the dollar's still found its way down here. Will the Swissy pause? Will the S&B pause? Possibly. I mean, there's some of the inflation data from Switzerland has been a bit weaker. You look at this on dollar CAD. The BOC have already paused, and economic data suggests that they can probably remain there. So a further push to the upside with the dollar CAD looks like it's on. The ECB probably aren't pausing, but economic data is so poor that as soon as they do, this thing is tanking. And I wonder whether there might be sort of like some positions kind of getting into play. Same with the pound, actually. Economic data said it's not the sickest kid, but it's only really losing out to the euro. So this thing is probably going to tank to the downside as well as soon as they pause. Problem with the Bank of England, of course, is that inflation's so crippling that that they probably
the CPI went up again, did it?
It was 10% again yesterday.
Wow.
I think there was a little bit of easing, but it's just not sufficient. The CPI data in the UK is just it really is at dangerous levels. So there's really no chance of a pause. We got GDP data not that far away, a week or so away. And another reason that you might start to see just a little bit of easing to the downside with the FTSE, we talked about this with George on Monday. Do the indices start to suffer because of the higher interest, higher inflation and higher interest rates, and then GDP data, because GDP data is, okay, we're not in recession yet, but we're just about scraping through. And that would suggest coming out of stock. So I think that the stock market could come down a little bit. The other aspect of this, though, is, and this is why I'm a little bit skeptical about short, the Nasdaq, and why a long might be quite attractive. The thing with the Nasdaq and the S&P is that going into a rate decision, the S&P and the Nasdaq tend to rally. 10 days before the rate decision, these things tend to rally. So there might be something in the Nasdaq, as we kind of mess around here. And I don't see this breaking down, to be honest. I don't know why the Nasdaq would break down before the jobs data that we've got later on. Because if the jobs data comes in and it's popped to the upside, pressure on the Fed to potentially pause on interest rates, and that does pop the Nasdaq. I wonder whether we might get a situation where we pop on the Nasdaq for up to the interest rate announcement. The interest rate announcement comes in, and then we just collapse because eventually GDP is just going to suggest that that the Nasdaq is going to be under pressure as well. So I don't see the Nasdaq collapsing. The reason I'm not hedging is because some of the data from the actual Nasdaq companies hasn't been particularly good. Elon Musk talking about dropping the price of Tesla again. So they're feeling the pinch. Economically, we are feeling the pinch. And this is the most.
What do you mean dropping the price of Tesla?
They're cutting Tesla. The price of Tesla is not production, but sales. The sales price of Teslas.
Motor vehicles.
Yes. Yeah.
Right. Okay. Yeah. Well, they're going to have to, aren't they? Yeah. At the end of the day, otherwise they're going to run out of buyers. There's not that many rich people around.
Yeah, absolutely, man. Well, this is the sort of this is the conundrum that they've all got, all these companies have got, and there's still that thing that what in a way why would you kind of risk your money in the stock market when there are free or risk-free money, when there's risk-free money on offer from high interest rates? So, I don't know whether when you look at the value of the Nasdaq, and this is the other aspect of it. we've still got probably a little while to push before we're at this area of genuine resistance. There's probably an area over here as well, actually, pretty good. But there's this last area of resistance. We've got a little while to push before that point. But this monthly pivot isn't too far away. So where are we going from here? Are we going here or are we going here? I mean, that one's looks like a 4% move to the upside, just under. And that one would be, that one's about a 2.5% move to the downside. So difficult to know, mate, but I would suspect we're probably more likely to ease down than go up here. But I do think we go here eventually. You know, I don't think that this number is this level here is not going to get seen at some point in the next month or two. I think that we're probably going into
you'd
that
rather
point.
it hit that pivot first, though, wouldn't you? Really?
Exactly, because the trend is moving higher. It's difficult to make a case for the Nasdaq, and I wonder really, you know, going back to these levels, where while inflation's where it is, and while the economy's under such stress, seems pretty unlikely. So I wonder whether we might still have one more significant dip, you know, before we start to fix this up a little bit, because the interest rate dropping this year, it seems to be moving further and further and further away. And that's because, okay, we've seen inflation data in the United States and Canada and now New Zealand overnight, actually, just easing back down. But it's still very prevalent in the Eurozone, and it's still very prevalent in the UK. And it's still, at the end of the day, over 5% in the other major economies. So
That's right.
I don't really see inflation kind of going away this year. So the chances that the likes of the Nasdaq get the boost that they're after from lower interest rates seems pretty unlikely to me. So I wonder whether we might, yes, push into this area, but then ease back possibly to this area here, maybe even right the way back down to this point here, and create something of an inverted head and shoulders eventually. It wouldn't look all that attractive, to be fair, but I wonder whether we get something that looks more like this, and we eventually are going to push back into this area before we really do start the move back to the upside.
We've got to have a look at that level, haven't they? They really have. You've got to have a look at it.
You think so, mate? Yeah, you definitely think so. But it does depend on you know how things unfold. You know, the chance of a soft landing, still appear to be there, but just some of the dynamics are just so out of sync with what we've seen historically. You know, when they sort of like talk about prices don't repeat but they rhyme, it's very difficult to find the rhyme this year because you've got high inflation and a weakening economy. It's not the central bank playbook. It doesn't go under the central bank playbook, where normally you could lower interest rates if there was some economic stress, but very difficult for them to do that in this particular environment. So
yeah, they're running out of wriggle room fairly fast if they're not there already.
Yeah, they are. They are, and now you sort of like, you know, then it kind of brings us to well, okay, well, where's a more obvious play, and that's when I come back to the likes of the dollar and say, okay, well, you know, if I'm looking through this, the Aussie, and less so, but it does look, you know, you look at the bar from last week, negative, the one from the previous week, negative. This is suggesting Aussie weakness, dollar strength. You look at the pound. Same thing, last week was pretty negative. This week's a little bit flat, but we are at a level of resistance. That suggests, well, it suggests the risk is to the downside. It suggests that there's more money to be made down here than there is up the top, because there's not that much further to go there. Dollar Swiss, same thing, talked about it. You know, this looks like the risk is to the upside. Dollar CAD, probably around about in the middle, but it could push up to this monthly pivot and you know, or it could push down, but you know, but going through, you know, going right across the board, there's the resistance point with the euro, which we've hit. There's another one a little bit higher, but not that much further. Again, the risk looks like it's to the downside. So when I'm thinking about where the money could go, then I'm really interested in the dollar. Same with gold, actually. You know, so we've seen what the gap with oil that looks like it's near to being filled. But the same with gold. Last week's bar was very, very weak. It looks to me like this trend line is probably close enough to being tested. It may have a little bit more upside, but again, upside is 60. The downside, okay, the monthly pivots to around about a 50-50 point, and that's probably where it is actually. But there's still, you know, as we ease up, the risk still looks like it's to the downside, particularly when you look at last week's bar. And you look at the dailies, this has just started to hint at breaking down. You know, you draw a trend line in here, which probably looks a lot clearer on the 4 hour. You look at that trend line in there. It doesn't need to do much before it potentially breaks that down and retests, and then people will be quite happy to try and short on gold. But again, the risk looks like it's to the downside. So the dollar's interesting, but what the US needs for the dollar to have some strength today, particularly, is the jobs market remaining robust. And pretty much all of the indication is that the jobs market is going to remain robust. I see very little which suggests that the jobs market's going to all of a sudden start to show that the initial jobless claims is going to take a big jump. You know, that the labour market.
It doesn't seem to be happening anywhere in the world, does it? The labour market's tight everywhere.
It is, mate, and we you know, wasn't that long ago that we had incidental kind of reports from companies that they were cutting jobs, but that so far hasn't filtered through. I mean, I don't know whether it's just because that is such a leading indicator that it takes a while for it to filter through, and we may well see some weakness in the jobs market, or whether it's just not affecting the sectors that are actually the kind of higher employers, which is actually the tech sector doesn't employ anywhere near as much as manufacturing. So maybe that's some of the reason. But yeah,
I think, you know, you can add to that by what are they comparing these numbers on? Are they year on year? Are they quarter on quarter? Are they month on month? And the reason I say that is if they're year on year, you know, the economies and the business sectors are improving pro rata relative to the 2.5 years or nearly 3 years now that we've just had, which are COVID driven, right?
Yeah.
Where all these businesses had to close, lay off workers, et cetera, et cetera, et cetera. Now they're all coming back into the market, I suppose. You know, logically, that's the way I think. And I think, well, okay, it makes sense to have a tight labour market because all of those people who were struggling through COVID are now looking for work. And yes, there are jobs available. So kind of makes sense to me.
Yeah. Absolutely right. Absolutely right. Well, that needs to change anyway. So we are looking at that, mate. So, you know, housing data a little bit weak in the United States, and this is the thing, we are seeing sort of some economic weakness. We're definitely sort of like seeing that the US is under stress, but it's all about what the Fed are going to do, and the Fed probably won't do anything negative while the jobs data remains robust. Sorry, I just got some stuff from Lewis. Hi, Lewis. I'd like to hear your opinion on the euro. Yeah, so the euro, and it'd be interesting to get your take on this, mate, from a technical perspective.
Yeah.
But the same sort of thing with the euro. It's very difficult, really, to be bearish on the euro because of their economic situation. The inflation data suggests that they're going to keep going. Christine Lagarde has pretty much stated they're going to keep going. But if I'm completely honest, I'm not comfortable trading the euro long. Even with the fact that the ECB are probably going to be the ones potentially, the last ones to raise, because I think that they were behind the curve, and that suggests that they're going to continue to be behind the curve. What I'm interested with the euro really is as soon as they pause, because I just think the euro tanks from there. And I'm interested in the likes of the Euro Oz. I'm interested in the Euro CAD. Both for upside. Against the pound, I wouldn't be so interested. Maybe against the dollar as well, some upside is potentially on the cards. Seasonally, euro very strong right now. So another reason that I don't think the timing is yet, and I still think there's some upside in the euro, but I'm not comfortable with the euro trading it long, because they really do have a huge disparity between fighting inflation and crumbling the economy. More so than anywhere else. So I'm kind of weighing the two things up, and I think, well, which is likely to change first? Are they more likely to improve the economic picture, which enables them to continue to raise, which means that the euro long is a good bet, or are they more likely to have to pause because the economy is crumbling and inflation does actually ease because the economy crumbles, which is disinflationary, and we start to see the ECB maybe cut back on interest rates. So when I think of the two scenarios, what's going to happen first, I would have thought the pausing is likely to happen before the economic picture picks up, particularly because raising interest rates chokes it. So that's why I'm looking out for shorts in the euro, but I just don't think it's available yet. Well, I don't know how you think about that, mate.
Oh, mate, exactly right. It's not available yet. I agree with that. Although I am trading short on a smaller time frame, or actually end of day time frame, daily time frame. But I'll show you, the same chart I've had for months now, and we're at that pivot point, or that tilt point, if you like, where we're going to see very shortly exactly what the euro is made of. Frankly, in my humble opinion.
Let's have a look.
So the chart's, just screaming at me that we're at a major inflection point, and have been for,
well, you need to grab the screen now. I've just had the circle of death come up on my share. So this will likely pop out, but I'll pop straight back in.
Okay. Yep. My screen is on, so that's all good.
Okay. Your screen's on.
So, yep.
All right. I might have to pop straight out then, because mine's totally. I don't know why they allow me to continue to speak when Zoom's working. Okay. I am going to close this and come back.
Yeah, that's weird. Okay. Yeah, no drama. So to me, it's extremely clear that we're at a crucial point in the intermediate, if not longer term, for the euro versus the dollar. And I've spoken about this at length, where I'll go a bit wider so you can see the significance of this level, this horizontal level, which has in April 2019 to August 2019 to April 2020 refused point blank to go below that level, which was around about 109 from memory. Yep. And it's been support all through these areas here, resistance for a tiny time, and then it broke out. Are we at that point now? Well, we're certainly at that level now. I don't know if we're at that point where we're going to break out or not. And that's exactly what Ash just said. It's impossible for me to say which way this is going right now. My gut tells me that it's further downside. It'll probably go back and test this level here, which is parity basics. Oh, no, it's not even parity. I think that's 103 or something like that. Yeah. So, I see it back down here before it rallies, if it rallies, and eventually it will. I can absolutely see it in my third eye that's going to win, but we're back to $1.50. That's what I believe. I firmly believe that the euro will go back to $1.50, because the US dollar, to my mind, over time, and it might take 5 years, it will disappear, almost disappear. So I think eventually we go to here. But at the moment, at this very moment in time, what we do have is a battle at that very strong confluence area. And, I've tried to draw every possible thing I can on here to give me an indicator as to what happens next. And everything is telling me, wait till that level's broken and retested, or wait till price comes back underneath that level. And you can see the confluence here, right? It's massive. Support trend lines, resistance trend line, top of channel, horizontal level. It's all happening right here. So what I expect to happen when price does show itself here and say or tell us exactly what it's going to do, you're going to have plenty of time to get in, because this is going to go for a fair distance. When you hit a confluence area as strong as that, and you do get a positive or a negative move, it's going to be strong. So pay attention is what I'm saying. When? Absolutely no idea. But I'm hoping Phil will be able to tell me that one day. And we'll talk to Phil in a little bit and show you exactly what how he finds the right time to actually get into these moves. So I'm saying that this is an absolute crucial point right now, but I've got absolutely no idea what happens next, frankly. Wouldn't have the foggiest idea. Short term, more than happy to trade what I see. And that to me was a false break to the downside. Hasn't played out yet, but I'm not saying it won't play out. And I'm just not saying it will, because it's really indecisive. But trading what I see, as always, is the way to go for me. And I'll just do that at small risk. I think I've got 0.25% on this. It's not the end of the world if it doesn't work out. But if it does show its face, I'm in the market and I can add to the position as we go. If it's wrong, then so be it. We lost 0.25%. It's not too bad. So that's where I see the euro, mate. I see the euro as exactly as I agree with you. I don't think it's any time to be confident what's going to happen next. But that confluence area is massive. It's absolutely superb. And I do think we're going to see a big move once it makes up its mind. You back with us? I think Ash is having trouble with his...
No,
here he is.
back.
There he is.
Yeah.
So did you hear what I had to say?
No.
Well, in a nutshell, and it takes me 19 minutes to say 30 seconds worth of content, but we're at a crucial level right now. And what happens next, I've got no idea, frankly, but I'm happy to trade short term. But as soon as it does break this massive confluence area, and I believe this is a massive confluence area, we're going to see a big move over time, yes. And I'm calling one. I reckon 150 is not impossible once it does start to move. Certainly, up to 120. So I'm actually longer term bullish the euro, and that's not because I'm a massive fan of the euro. It's because I'm a massive fan of the dog known as the US dollar. Yeah. Because I think over time that's just got to disappear. I really do.
Yeah, it's picking that time frame is different. I mean, in the immediate, would you be bearish on the euro? Are you looking for this one to come down?
I am, but only on end of day stuff, because like I said to the guys, I'm trading what I see, and what I see is a false break of this resistance level. So I'm short underneath this bar. So far, I'm wrong. Right. I'm in drawdown, but as I said, if I'm right, and the directional move off this confluence area is short, then I'm already in the market and I can pick it up all the way down. If I'm wrong, I've lost 0.25% of my account. It's not going to, it's not going to be the end of the world. So that's my approach to it at the moment. I've got no idea, honestly, which way it goes next. Long term, I do. I've got a very strong opinion that it goes long, but that could be 5 years away. I can't give you that time frame. It's impossible to say. But at the moment, I think it's guesswork on the bigger time frames. Shorter time frames, more than happy to trade it as normal. Pretty much that simple for me.
That sounds good, mate. Yeah, I think I would concur with that as well. I mean, I suppose it's one of those things, isn't it, that if the dollar is going to weaken, the other question then is the euro the best play against it? We're probably
it's like I said, it makes sense to me, because the dollar that we're looking at right now is at a support level. Yeah, the euro naturally is at a resistance level. Where do I gain bias? There, right there. There's my bias. Does it mean I'm going to put my house on it? Certainly not. But they're the sort of things that just I should never say it, but to me it's a no-brainer. If I'm at resistance on the euro and I'm at support on the dollar, there's really only one directional bias that I should have. And then if I see a setup, I'm going to trade it.
Yeah. Yeah, I'm a bit like that with the dollar Swissy. I've got to be honest. Even though the Swissy has surprised me, out of all the currencies that is doing well. Now I know it's a robust economy, but the reason it surprised me is that the S&B are way off really when it comes down to where interest rates sit. So the carry alone suggests that if you do get into anything against the Swissy, apart from the yen, you're going to make money.
Yep.
So yeah, the Swissy surprised me, mate. I mean, it has really emerged as the kind of the strongest of the currencies, and I guess maybe some of that is because of the concern, for global recession. But if that lifts, and we do start to kind of pick things up, then again, I think the Swissy is probably the maybe the story of, and it might be as late as 2024. Not that I want to get prepared for 2024 now, but it might be the story of 2024. If 2023 is the Swissy and it remains strong, we do tend to see these things reverse from one year to the next. And I wonder if next year we could be looking at exactly the opposite, just like we've seen with cryptocurrencies and everything else. Cryptocurrencies turned in November, and they're obviously sort of certainly the first quarter. They've been the story. They've just turned and they've kept going. I know we're getting a bit of weakness today, but generally speaking, it's a year-on-year event. You can take a position and just leave it. And if the Swissy doesn't, if the S&B doesn't raise interest rates anywhere near anybody else, then there's a chance that actually they are the ones that suffer. As I say, next year, as late as next year. Of course, by next year, I would have thought some central banks will probably be starting to cut back on interest rates anyway.
Well, if nothing else happens next year, and how can that even be the case? How long since we've had a year where nothing happens? My God, 2007, 2008, 2009. then we have Brexit. Then we have Trump. Then we have in 2024 we might have Trump again, right?
I mean, you'd never put anything past him actually after the first term, but how Trump can get in after being arrested, I don't know. I don't know how that works.
No,
I mean, it's a messed up system.
You've never heard of martyrdom?
Yeah. Oh well, this is not so much that I don't think he'd be voted on, but how can they even allow it? How does the Constitution work in the States where you can have somebody who incites a riot, gets kind of thrown in front of the courts for it, and yet they can still stand for president? It just makes no sense whatsoever.
Well,
he'd be strung up in this country. Well, maybe they wouldn't. He'd be strung up in France, but in this country we'd be a little bit more pragmatic. But they wouldn't be getting in. That's for sure.
I can answer that question fairly easily by turning it on its head and saying, well, how come in a country, where are we, in May? I think there's been something like 40 or 50 mass shootings in the country so far this year.
Yeah.
And they've not only still got guns available and what do they call those things that shoot rapidly? Rapid fire SLRs or whatever they are.
Machine guns, yeah.
Yeah, whatever they are. Semi-automatic weapons available over the counter that a 14-year-old can walk in and buy.
Yeah, I know, mate.
And they promote it.
I know.
They actually promote it. So
I read a story earlier on about a cheerleader that was shot overnight, and as you say, mate, it's just how can you have anything that runs with any kind of confidence that way? And it just if somebody asked you about living in America, your first answer would be no, and I would suspect your reason for that is because it's so dangerous. You just don't know really sort of from one. You can be sort of minding your own business and you don't know because anybody can get these anybody can get weapons and semi-automatic weapons. So you just don't know who's holding these things and they don't seem to have any motive.
Yes, you do. They all are.
Yeah.
And that's the answer. Not just one, but multiple firearms. They've all got multiple firearms. Yeah, it's insane.
It's insane. Yeah, it is. It's insane. Strange for
So anything's possible. That's my point.
Yeah.
Speaking of anything possible, How would you like to know when the market's going to turn?
Oh, I mean,
with a confident, how would you like to be confident that the market's going to turn or do something on this day?
That I want to know. I'm in.
Would that be
I'm
good?
in, mate. Yeah, that'd be
You're
great.
interested.
Yeah.
Phil, are you in the room? If so, speak up, my friend.
Yes, I'm
Phil,
here.
there he is. Mate, you're very, very generously offering to come on with us on a Thursday and say good day and tell us what your thoughts are regarding what may happen and at what particular time that may happen. Is that right? Are you still willing to do that?
Yeah, sure, mate. Yeah.
Fantastic. I suppose just to introduce yourself, who the hell are you, mate? What's your background? I mean, I know you're not an urger in any way, shape, or form. You've found us because of me, because we're mates, and you and I have been sharing stuff for the last few months, and both are very interested in what we both do. I'm more fascinated than you probably are. I'm more fascinated with what you do than you are with what I do, I suppose, is the best way to put it. But I'm trying to say that you are not affiliated with anybody. You don't have any interest in promoting anything. You're just here to share. And I think that's fantastic. And I thank you for it. But if you could just give us a brief outline of what you trade and why you trade it and where you got into the game, I suppose that's probably the best place to start.
Yeah, well, I just started. I've had an interest in it all my life from a kid. I used to sneak off the school bus early and go and try and read the Financial Review at the local library.
Why would I not be surprised?
so that's 50 years ago now or more. So yeah, I began training in the early 90s, and I soon realised that there was. I'm an engineer by trade, by the way. I soon realised there was three main issues that I needed to contend with to trade profitably, and they were that I must have it, which I do have luckily, a totally positive attitude, the need to completely eliminate the emotion from my trading, which was probably the hardest thing to get rid of. In fact, it took me about 28 years, I think. And probably naively, I thought I needed to work out the timing of the trades, because to me, there didn't seem to be any Bible. I paid some good money to learn to trade off David Bowden in Australia, which was a lot of rules and bits and pieces, but it didn't add up to actually telling me exactly when the trade was due. So I guess that's what got me really interested in the subject that we're talking about today. Really, that's the bottom line. Yeah.
Which is what before I met you, I'd never heard of it, right? And I've been around trading for quite a long time, and technical trading for quite a long time. And so has Ash, and I'm not sure if Ash had heard about it, but I don't think he's ever witnessed it before. And certainly people in the room, most of whom we know, would be maybe have heard of it, but never knew anything about it. What is this thing, mate, that you've studied and now I won't say rely upon, but I will say you rely upon it. It's your Bible, isn't it? Really, or part of it.
Yeah. All over the years, I studied many systems like WD GAN, which a lot of people would have heard of, and Elliott Wave, obviously, which everyone knows about, and Wyckoff, and volume spread analysis, and heaps of others. But I end up purchasing this course from David Bowden in Safety of the Market in Queensland, and that introduced me to the concept of measuring time by degrees rather than in days. And for some reason, I just really embraced this. It just made sense to me.
Have you got any chance of making us understand what the hell that means? You probably have to show us. Are you able to do that?
Yeah, sure, yeah. Well, obviously my trading improved because of that.
I probably have to give you power, do I? Hang on a
I've
sec.
always felt there was something else different. There was something missing, in the practical application of the viable concept. Basically, is what I'm saying, I guess. So I want to share screen.
So maybe when I come up with names for everything, right? We might call this the missing link.
Yeah, you could do. I call it an MRI.
I like that.
The market reversal index. Indicator, I should say.
Which is kind of an X-ray into the market, right?
Yeah, that's right.
MRI.
Yeah, exactly. Yeah.
What is MRI? Resonance image. What's the first one?
What did I do there? Why am I
magnified resonance image, something like that. But MRI, okay, we'll go with it.
What have I got here? Oh, what have I done?
Don't worry, Phil. Take your time, mate. This is sort of like one thing about all this stuff is that knowing what you do is one thing, but Zoom is like you need a degree just to kind of get the screen working sometimes. So don't ever worry about the Zoom stuff.
Catherine, thank you. You're my saviour. Magnetic resonance imaging. That's the one.
That's it. Yeah. So I've started real basic here because Jeff assured me that not many people would be right into this stuff to any degree. So if we divide, well, first of all, we're going to start with the cycle, and the cycle is 360 degrees, obviously. So there's 360, whatever there is, 5¼ days in a year, which I haven't really acknowledged in my mind for years and years and years. Once you get the cycles in your head, your whole life becomes easier. But this is it applied to the chart. So if we divide 360 degrees by 12, we end up with 30, obviously equal 30-degree cycle, 12 30-degree cycles. And we're just going to use, there's lots of cycles, there's 30s and 60s and 90s and all this, but we're going to just start with this as a basic introduction to the subject. So we've going to, for this case study, we're going to agree that a 30-degree cycle is a good thing. And what I've drawn, this is, I've used the FTSE because obviously we've got a resident expert on that, so we can pick holes in anything I do and let you know if I'm talking rubbish. And there's different examples of our 30-degree cycle, and they do vary slightly and they have a different applications. And one is because there's long weekends involved, or holidays, or the fact that there's not an even number of days in a 30-degree cycle. So you get things like a 31-degree might fit in this case, or a 29-degree might fit here. On other particular, the FTSE doesn't seem to do it much, but other things, a 32-degree might come up, over Easter or something, where, because this is a trading day chart, so those days get deducted from the chart, so then you end up with a bit of a disparity in the chart. But they do still work out for various reasons. That's very technical, we won't get into that. But for example, we've got a high here, look. Oh, that's not a good example to start with, probably. Here's one, we've got a high here, and 30 degrees later, we've got a low. We've got a low here, and 30 degrees later, we've got a high. From that 30 degrees, we've got one where there's another high there. So
are we talking about days to Phil? Are you
no,
sort of saying?
No. This is our 30 degrees cycle, not days cycle.
So what do you mean by 30 degrees?
Well, that's what I tried to explain. I'm not very good at this sort of thing. So there's 360 degrees in a cycle.
Yeah.
From your birthday to your birthday, regardless of the days, it's a 360 degree cycle. You divide 360. You divide 360 by 12.
Yeah.
Comes out at 30. We divide that cycle, as we know it, a cycle, or it's a harmonic as well. We divide that circle into 30-degree segments.
Yeah.
So we've got 12 30-degree segments in one cycle.
But doesn't that come back to relating to days? Because if there's 365 days in a year, give or take the odd 31, you might need to do that 5 times. It's 30 days between each cycle.
Well, it's not exactly. That's the whole point. It's a quarter of a day. And you've got to remember, because I measure time by degrees, I'm talking about from the beginning of time to the end of the time, not this year. And over time, it would get out further and further, get more inaccurate because the days wouldn't add up.
Okay.
It gets a bit technical, but just if it's easier to accept that anyway, if you just do that for now.
Yeah, no, I think that's probably better for me to do that, mate. Yeah, you keep going because I think it'll drop in eventually. I think this is fascinating stuff.
Yeah, so where it gets worse is it gets worse as you get smaller in the time frames actually, but 30s. I don't know whether to explain to you years or in months, but you know, say 30. Two 30-degree cycles, or say 4 30-degree cycles, will end up being 61 degrees. So it won't add up as far as the cycle goes. It just gets out of whack. It just gets out of whack. That's the bottom line.
Okay.
Yep.
So if it's not by days, how do you measure where the next 30-degree cycle comes in?
Yeah, see, the trouble is you know too much. So, and I can explain all that to you, don't get me wrong.
Okay.
But I'm just assuming that there's people that don't, you know, it depends. This is what I've given you this illustration for, is because this is an illustration of where the different 30-degree cycles. Okay, so hang on a minute. So we've got a 360-degree cycle, and then we've got 30-degree cycles. But within this 30-degree cycle on its own is a 360-degree cycle.
Right.
Cycle within cycles, yes.
Agreed?
Yeah,
So
makes sense, yeah.
A 60-degree cycle is one 360-degree cycle, which is a 60-degree cycle within the 360-degree cycle, which is within the 30-degree cycles within the 60, which is in the 360. So this is where it's complicated, and I think this is why the translation of the principle of time by degrees gets lost, and it doesn't get used. And people you show it to come up with all these questions that legitimate questions that you're coming up with, and it just all gets too hard. But I've worked out a way to make it easy, and that's what I'm trying to illustrate. So maybe some of these
and I just for a second, Phil, I'm backing this up because I've seen it in action. And I see what it's capable of doing. So if you're lost, I get it, but stick with it because this could very much be an eye opener for you.
Cool. Okay. All right. My interest is piqued. So I see where that last arrow is. Are you suggesting then that we are at a 30-degree cycle now, and that suggests that the FTSE is most likely to actually move down?
How about we go to the next page?
Okay.
We'll save a lot of mucking around, to be honest with you. So I just want you to get a handle on that we can actually have 30-degree cycles anywhere on the chart. There's more than that here. I just picked out some of the different types. This one starts at a high and ends halfway. It looks like, at face value, it looks like it ends up halfway down the range. How can that be a cycle? However, look at the day that the cycle ends up on. You tell me that day is not a reversal day. You see the day it opened down toward its low, it ran up to the high, it went down and finished on below its low for the day. That chart, regardless of the rest of it, it turned around on that day.
Got it.
What would Jeff call that?
Got it. I understand what you mean, mate, because actually that's right on support, and what it does on that point is break the support. So it actually sort of it starts as a new cycle down again. Yeah, I get it.
Yeah. Okay. So to me, that's a 30-degree cycle. In fact, what I learned to do early on was I don't question this anymore. This is like I have a dog with a good nose. If he runs away, he's up chasing something, there's something there. And if there's tells you there's a cycle there and you can't see it, that's because you can't see it. There's one there. You just got to work out why it's there.
Yeah.
Okay. So I just picked these ones. So that's one example. This one up here that I started with, and I get distracted. So you've got to bring me back online. So up here, I said, well, this is a good one to illustrate because it's from a low point to a high point, 30 degrees. This one's from a high point to a high point, 30 degrees. That's fine. You said they're different examples of where it can be used, where it shows itself, if you like. But you know, there's plenty more. We're going to look at the time, I guess, because this ain't going forever, mate. Believe me. We could probably put in one, probably from there to about here's probably 30 as well. Let me just move your pretty face, and I'll grab this over here, and we can probably.
You must have been talking about me, right?
So from there, I don't know, and I've got no idea this answer, right? But there you go. For some reason, it comes out to there.
So this is an indicator, is it? This is a mathematical equation that you've actually now got as a indicator on your charts.
I use it as a tool. I don't know about the indicator. It's not anything special, mate, because it's a 360-degree cycle. It's the whole world revolves around it. So we haven't learned to use it yet. Well, most people haven't learned to use it yet. It gets deeper. But see that day there?
Yeah.
As I said, I didn't pick this. I didn't, this is not selectively picked. I just picked ones to show you guys where they can be used or where they show themselves. Well, that just particular one we just picked off the top of my head, and it comes out of that day there. Well, look at that day there. What do you call that day? Look at the shape of the
Yeah, it's an inverted head and shoulders. Yeah.
Well, something happened.
And the bar's a reversal bar.
The bar itself, you see.
Yeah.
I didn't choose that. You know what I mean? This just happens all the time. It's unbelievable. We'll just go for the sake of exercise. We'll just do another one because this is just a tool I've got that does this. You see. So what do we do about? There's a lot of technical variations on the theme, which I don't really want to get into right now. But there you go. So that's that day there. Now, so well, that's not the high or a low or whatever. But look here, it mucked around. You're trading this, and you might have got out there because it was looking pretty high for other reasons. I may not have, but anyway, we'll just say that you've got it. You've been in this trade. Well, this is looking a bit toppy now for whatever reason, and you get out there, right? But then look, it mucked around for 2 weeks. But then what happened? After it mucks around for 2 weeks, that particular day, for some reason, set that chart off again. So I don't know what turned it. I can't even explain that to you. But the point is, to me, I know that point is significant because of this point here. That's a significant point. It's backed up by that point there, and this point here, and that point there. And now that day it ran away for some reason. And we're not going to go any further than that because it starts getting way too technical, and you don't really need to know. But that's just what I'm trying to impress upon you. You need to get a handle on this before we look at the next page, because this just gets more and more complicated as far as the screen goes. So are you happy if I just change to the next screen at this stage?
Yeah.
Have we all got that?
Yep.
Yeah.
Can you make sense of that one, Ash?
So what does that say? Past significant highs of low or lows. Oh, there it's converted to time divided by degrees and applied to the chart. There are 3 or 4 per month, depending on the position of the sun. Yeah. No.
So that's a DNA chart, right?
I was only being a bit of a smart ass. I was being sarcastic when I asked you that question. It was sort of throwaway one, but
that's all right.
the point is that this is something you'll never see, because this is what you need. You can't buy this for love nor money. And the time by degrees where the sun is well known. I've got a book in front of me called an ephemeris, and that tells you where the sun was in the sky whenever in any particular day in the year, from the beginning of recording to as far into the future as people want to pay money to buy the book. And what you get is, and they just happen, you've got to accept this stuff for now. It just happens to be approximately 4 times a month in the past on the ASX, because that's one I know, where there was significant highs or lows for whatever reason.
Interesting. That's
right?
Interesting. That is interesting. So now we're bringing nature into it, right? I mean, this is all
about nature. This is all about time. Time is eternal. It's got nothing to do with charting.
It's the only thing that's constant, right?
It's the only thing that's constant.
So when we looked at the previous
chart that we looked at before. Sorry, you go.
Oh, I was just going to ask. So the chart we looked at before, that was also in relation to something in nature.
Oh, well, the time is a 30-degree segment.
Yeah.
Plucked out of the air from anywhere. It doesn't relate to anything.
Yeah.
It's just 30 degrees. Okay.
Okay.
We are relating it to the chart. We're using that 30 degrees to the chart. But but it's nothing to do with anything apart from it happens to be a measurement of 30 degrees in chart width, and we stick it on the chart as a tool. If that makes sense.
Yeah.
Okay, that's the first part of the story. The second part of the story is, while looking at the ASX, for example, over the years, there's been significant, all-time highs or all-time lows, significant points on the chart, and you put all those significant, if you pick out just, you don't split hairs, you just put the whole chart out in front of you, and you go, that's a high, that's a low, that's a high, that's a low, that's a high, that's a low, double top, triple top, that's a high, that's a low, whatever, and you put all those dates on the chart, on your page. You get an ephemeris, and you look up where the sun was on those days of those significant points. Now there might be, I don't know, it doesn't matter. Say there's 100 of them, and you put them on a chart. I can guarantee you now it will be on one of those 4 days every time. The sun was in the same place in the sky on one of those 4 days, all the time for the history of the ASX.
Right.
It blows me away. That blows me away.
Right, so now we know that. I was taught to trade by using time by degrees and sun time and all this stuff, but I was taught by, you get the date and then you look up the ephemeris, and that gives you an hours and a days, minutes and a seconds, like them, because the sun revolves, or we revolve around the sun. So it's in, how you measure degrees in a, what's the word, Jeff? So you're measuring minutes and seconds, radians, like from the center, because the sun's the center and we revolve around it. So that 360 degrees that we turn, all the minutes and seconds, we just looked at a 30-degree segment, right? If you break 30 degrees down, it's 15. If you break 15 down, it's 7 or whatever. So you got 30 degrees, 1 minute and 2 seconds, 30 degrees, 1 minute and 3 seconds, 30 degrees, 1 minute and 4 seconds. As the Earth moves, its time, where the sun is in our sky, is changing a minute or 30 seconds at a time. And all you can do it right down. If you're trading charts, it really amuses me because they trade 5-minute charts that don't make any sense. You really want to make any money, you trade 4-minute charts, because if you run the cycle right down, it gets right down 4 minutes as the number, not 5. I don't know why people do that, but that's I've come from a different story, obviously. So that's just how it is. So that's what we've done. So those 4 days, over and over, not days. Now this is why days don't come into it, because these are 4 moments in time of where the sun was at a particular place on our chart. So it's not a Monday or a Wednesday or a Friday. It might be a Monday, it might be a Saturday that we use. And because our chart is all wishy-washy, our stock market, instead of using the Sunday date, we probably would use them, or in fact we do, we use the Monday. Some of these here are a bit close together or whatever. They're different because instead of using the Sunday or the Saturday, the chart seems to work if you got to use a trading day, because that's what we do. So it's Monday, we use Monday's date. And it makes this pattern. And if you, I don't know whether you'd pick it up, but if you closed, if you got enough of these, or I'm probably enough on here probably. No, I've just given you the illustration of what I'd made just for the show. So you will see that these see how there's a wide one, then 1, 2, 3, then another bit of a wide one, 1, 2, 3, 4, another wide gap, 1, 2, 3, 4, a wide gap, 1, 2, 3, 4, 5, a wide gap, 1, 2, 3, 4, a wide, 1, 2, wide, 1, 2, wide, 1, 2, wide. See, well, that pattern, it won't repeat on this width of the page, but over a year or 2 or 3 it will.
Right.
So we end up with this big pattern, and it's
Right.
the same for eternity. Whatever the harmonic of the ASX is, that frequency, this is the pattern you get on the page.
Right. Right.
So what I've done now is, as I mentioned just then in the conversation, with a chart, everything is moving. So, who won the football? What's the FTSE doing? What's the RBA doing? What did the president start a riot? All that is variable. Well, that means that what you and I are trying to trade, the goalposts are on bloody roller skates. How the hell do you trade that?
Yeah.
That doesn't make any sense to me. If you put this on the chart, this is fixed. You can't argue about that date. That's where the sun was on that day. You can't change that. It's fixed forever. and into the future. This is in. I've got your damn pictures down the bottom here somewhere now, and you're blocking up the screen. I don't know how to get rid of it. So there we go. Force it to the side, and it takes itself up there. So this date here now. Look, vertical line properties. That's the 24th. That's the 24th of July. That is where the sun is going to be on that date.
Right.
You can't
24th.
change that. It's not significant. Don't worry. That's not a deal breaker. I'm just explaining to you. You can't move where the sun's going to be on that day, mate. It's going to be there.
Yeah.
Okay? On this particular day here, if you want to turn this into days, that's up to you. I don't look at days. It doesn't worry me. I don't care what day it is. But on this particular day here, it's the 17th of July, right? On that particular day, that is where the sun is going to be. On that 17th of July, there you go, there's the date. So that particular day is when the sun was at a very famous high or low in the past. And they all fall one way or another on that date, or a quarter of them, or whatever percentage is another game to play. But anyway, that's the whole point. So the point is, this is where the sun is, and that doesn't change. Then we can trade something.
Brilliant. So mate, here's what we're going to do. We're going to put you to the test. Not today, because we'll run out of time. And we're going to show exactly the chart that you're bringing up now, next Thursday. And it's at that point that it all comes together, and all of those time by degrees and sun in the power of 10, wherever, blah, 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 that everyone thinks is all mysterious and out there right now, will all come together, right? On that chart right there, you can explain exactly why this happened then, and what you do, more importantly, when those signals trigger.
Yeah, that's correct. Yep.
Yep. So, mate, we'll need to leave it there because we're out of time. But thank you so much.
You're welcome.
I'm sure everybody in the room's going WTF right now.
Well, if you don't explain it in stages, this just looks like a mess unless you understand what's all made up with. You see, it's all the whole picture. So there's not bits of it missing. So I had to do that first, I'm afraid, to make sense.
Don't be afraid. I think you've probably tweaked a few interests there, going, "Holy shit, what's this bloke talking about?" And is there anything in it? Well, I'm here to tell you, and I can back him up. There's something in it. So if you want to know more about it, tune in on Thursdays to this show, and we'll expand on what Phil's just given you, a very, very, very small portion of what he does. But that's why he does it, because everything he's got there is constant. It doesn't change. And I think that's fascinating. So, mate, thank you so much.
Yeah, thanks, Phil. Appreciate that, mate. Really, really cool. I think anything which kind of shows a different light in the market and a different approach is well received. And this stuff, I have to say, I mean, I haven't got my head around it yet, but it looks fascinating.
Well, if you can get your head around it in half now, mate, you're doing good, because it's taken me about 5 years. Yeah.
All right, book yourself in for the next 5 years on a Thursday. We'll get it sorted.
Well, if I have to, I'm still alive. I suppose I can.
Amazing. Thank you, mate.
You're welcome.
All right, we better wrap it up, mate. We'll be on overtime shortly. What's double nothing?
Well, casinos. I think we can wrap it up, mate. And just looking at this market, I mean, the FTSE 100 looks weak, but it's actually not really done. Oh, I almost did I get the profit?
Go on, John.
Well, okay, let's have a look at it. It's actually has closed out. But not the not exactly where I wanted to take the money, but
it's seriously 9 o'clock here, I've got to tell you. Thursday night.
1 o'clock, yeah.
Stop this share, will I, Jeff? Yep.
Thanks, mate. No, it's all good. Yeah, I did manage to kind of get the profit at the bottom there, but I still think that there might still be more in this FTSE. I'm looking at it, wondering whether there might be another entry. I'll tell you what did happen, which is of interest, is that the Nasdaq has broken through this level here, and I wonder whether this might end up being a false break or not. If it was to close down here, it would suggest maybe easing further down. But if it holds this point, then the Nasdaq might get a little pop to the upside. But the momentum currently is down, so actually sort of trying to take it on long here doesn't look wise. And if you kind of couple that with what appears to be going on with the dollar at this particular stage, we got Aussie dollar. That's not really kind of like, yeah, that's not really too certain really right now. But what appears to be going on with the dollar is some weakness as we speak. And but again, right on these levels, I mean, particularly against this dollar Swiss, right on these levels. And you'd wonder why that would break down, unless there's something going on that I'm not aware of. I'd wonder why this would break down, but it might break down. It might ease a little bit further. But this going down while the Nasdaq going down is just a little bit concerning. You know, they really are kind of very conflicting signals at this stage. Which that says to me. Which is one of the reasons I decided to come out the FTSE a bit earlier. It's just an odd market. It's not reacting the way that I'm that comfortable with. And I wonder whether we are now waiting for the US session. I don't think there's no trade today. I just think that the US session might be the time we get some genuine movement. So we've got to wait until we got about 3-4 hours until the US data. So we're looking at maybe taking the next 3 hours, maybe taking the next 3 hours off and coming back in a bit, mate. But right now, I think I'd say to everybody, just be very, very careful with this market because it's just sending very mixed messages.
Yeah, I've got no intention of trading beyond now. I need the euro to tank a little bit to get me some money in the bank. But apart from that, hope you got the oil trade from Monday. That looks to be a good one, but I'm not adding to my positions, that's for sure. So we will bid you adieu, and thank you very much for being our trading buddies for today. And thanks, Phil, in particular, for putting everyone in a spin. And I think that's fantastic. You've got all weekend and most of next week to think about that, guys. But seriously, pay attention. I think it's very, very, very interesting and worthwhile your attention. Ash, mate, thanks for being me buddy.
You too, mate, as always. And obviously thanks to Phil for joining the crew for our Thursday sessions. I think, Thursdays have all of a sudden got a lot more interesting, you know? I think that's really, really smart, you know? We've got some new education to kind of get through.
Brilliant.
Well, thanks. I'm glad you enjoyed it, Ash.
Yeah, it's great. It's you know, as I say, I usually like something when, I mean, Jeff's managed to certainly qualify you, but I always like something when I don't get it because it kind of it makes me sort of think, okay, there's something going on here that I've been missing. So yeah, I'd say Thursdays have all of a sudden started to become a lot more exciting.
Brilliant. All right, guys, have a great.
Yeah, great.
Excellent. Thanks, Phil. Have a great weekend, everyone. And as always, bye-bye for now. See you.